Module 6, Chart Analysis. What is a candlestick chart? A candlestick chart is a visual representation of price movements within a given time. Each candle shows price action of a specific period, e.g. 1 hour candlestick or 1 day candlestick. So here is an example of a candlestick chart, right? You can see in the candlestick chart. These green and red things, you can see they are called candlestick. They are just a representation of price movement in a specific time. And I can see this one mostly in 1 hour chart, right? And you can see every single candlestick was representing 1 hour. So it was just showing you what is happening in a certain hour. So at this hour, it ended as a green candlestick. The market was the whole hour. The market was. It doesn't mean like the whole hour the market was bullish, but it just means that on this hour the market was bullish. It ended as a bullish market. What is a candlestick? Because I have talked about the candlestick chart, but what is it? What is a candlestick? Well, candlestick shows the open price when the candlestick starts, and the closing price when the candlestick ends, right? It also shows the highest price during that time period. If you are dealing with a 1 hour candlestick, it just shows you the highest price during that 1 hour and the lowest price during that 1 hour, right? So here is an example of a marked candlestick, right? They are called Japanese candlesticks. Right, Japanese candlesticks are informed using the open, high, low, and close of the what chosen time frame, right? So you can see this is called the upper shadow, it's called the lower shadow, or you can just call them wicks. This is the body of the candlestick, right? This is the open, and this is the low, this is the close, and this is what the high. And we have also, and this one is showing what a bullish, what is a bullish candlestick, and this one is a bearish candlestick, right? So this is basically a candlestick. This is what a candlestick looks like, and these are the details you need to understand on a candlestick. Components of a candlestick, right? Body, I showed you the body, the range between the close and the open and the close, right? Then we have the wick and shadow. These are the lines above or below the body representing the high and low, right? If the close is higher than the open, is bullish, green or white candlestick, whatever the color you want to represent a bullish candlestick. If the close is lower than the open, it's a bearish or red or black candlestick, right? So it's just I can just come here and show you what am I saying. If they're saying for the first, is saying if the close is higher than the open, right? If the close is higher than the open, so at this point the close is higher than the open. So it means what? It's a bullish candlestick, right? And if the close is lower than the open, it's what? It's a bearish candlestick. This is just basically it, right? This is just basically it. What is a time frame, right? A time frame is the duration each candlestick represents on a chart, right? Common time frames are 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hour, daily, and weekly. So you can see that here on my right side also is an example of time frames, right? So you can choose which time frame you want to look at. So if I click on the 1 hour right here, you're going to see that, if I click on the 1 hour right here, you're going to realize that each candlestick will now represent an hour. If I click on 15 minutes, each candlestick will represent 15 minutes pricing. And if I click on 1 minute, each candlestick will represent 1 minute pricing. If I click on 1 month, each candlestick will represent 1 month pricing. Time frames in relation to analyzing. Different strategies use different time frames, right? Scalpers use around 1 minute to 15 minutes charts. Day traders use around 15 minutes to H1, and swing traders use H4 to daily. Position traders, investors look at daily, weekly, monthly. So you can be a day trader but also looking at the H4. It's okay, right? It's not like you are restricted to all these time frames. You can look at them, but sometimes it's not worth it to look at a weekly time frame when you are a day trader, because what's happening on a weekly scale on a whole year scale is not going to actually really affect you on a day trading. But what's happening on a weekly scale is going to affect you. But the whole year or the whole it's too big for you. You are going to see it when we talk more, when we start doing live examples, right? Analyzing multiple time frames help you understand both short and long term trends, right? Improve your trade decision, right? Like you can just look at the H1 for a better view of the whole week, what's happening the whole week, and you can come and drop down to the M15 to look what's happening that day, right? So that's basically the time frames. You price action. Right. So remember we spoke about technical analysis. Now to start talking about technical analysis only, we are going to start with price action, the use of charts, chart patterns, candlesticks, and indicators. Now we are seeing what price action, how is price reacting to what to certain times, to certain areas, whatever support and all that stuff, right? So this is an example of a chart, and this is an example of a trade running in profit. This was found in New Zealand, and it's running in profit, right? And this is an example of a chart. So you're going to be using this chart to mark and see how this trade was executed, why this trade was executed. Using just data you find on the chart, not elsewhere. Not using fundamental or sentiment, no, just using price action, right?